Good morning.
Okay. Good morning, sir.
So this is 7:20 already, 8:20 already. So I'm going to start by 8:20. I've sent message to the group. So good morning, everyone.
Good morning, sir.
Okay. So this morning in our Saturday class, we started a public sector audit. We couldn't finish public sector audit. That was upper Saturday. For last week, I think last week Saturday, last week Saturday we did a public sector audit, or which topic do we do last week Saturday? But I could remember this public sector audit, we have not finished it. So we are going to finish it today. We are now going to look at one aspect of the IPSAS too. We look at one aspect of the IPSAS. Once we look at that, so by God's grace, by our next week topic is going to be on sustainable development goals. So in our last class under the public sector audit, we look at value for money audit. We talk about the three components of value for money audit: efficiency, effectiveness, and economy. We discuss them. We look at step involved in value for money audit. So the next type of audit we are going to look at under this public sector accounting is called internal audits. Internal audits. Internal audits is an independent appraiser of activities within an organization. Independent appraiser of activities within what? Within an organization. An independent appraiser of activities within an organization for the review of operations and as a service for management. So the purpose of internal audit is to ensure that there is effective evaluation of internal control system, and is to ensure that the internal control system is being applied as prescribed by the management, both in theory and in practice. So that is the whole essence of internal audit. So, like I said, it's an independent appraiser of activities within an organization for the review of operation and as a service to management. What are the scope of internal audit function? What are the scope of internal audit function? One of the scope of internal audit function is called prepayment and post-payment audit. Prepayment audit and post-payment audit. Like we all know, prepayment audit, there are those audits that will be carried out before a payment transaction or a payment voucher will be initiated. What we are saying is one of the job of internal auditor is to carry out prepayment audit. Before any payment, before an organization can make any payment, internal audit have to review the payment. What does prepayment audit look like? Internal audit have to carry out arithmetic accuracy on the payment. It has to ensure that the appropriate taxes have been added. It has to ensure that the value, the product stated in the company providing the service, they are registered with relevant tax authority. It has to ensure that the payment is not going to personal accounts. So all these are done through prepayment audit. And the second aspect of the function of scope of internal audit function is post-payment audit. Post-payment audit means an audit carried out by internal audit after payment voucher was initiated, after payment for the transaction. What does post-payment audit mean? In such case, we need to review as an internal auditor to ensure that after we have made the payment, do we actually receive the good? Do we actually receive the service? Do we actually enjoy the service? So the tax deducted, have you remitted the tax to the relevant tax authority? So what is the specification of good do we receive? Is it the same good stated in the payment voucher or the pro forma invoice that we actually receive? Do you understand? How many quantity do we receive? All these are done through post-payment audit, which is one of the functions of internal audit. So another scope of internal audit function is called vouching of payrolls and third-party claims. Vouching of what? Payrolls and third-party claims. Internal auditor, they are the one that will vouch the payroll. Payroll means how, when an HR, the human resources, prepare the payroll. So an internal auditor will be somebody experienced in tax, accounting, and so on. Internal auditor have to vouch the payroll to ensure that the appropriate tax has been deducted, to ensure that the appropriate pension, the relevant deduction has been made. You understand? So this is one of the functions of internal audit. Another one is auditing of store movement and record. Internal audit, they normally do store counting or store movement and record. So this is one of their functions as an internal auditor. They audit store movement and record them. They audit the inventory movement in an organization. They do the store counting in an organization. They ensure that we have an inventory register. So all these are done by internal auditor. Another function of internal auditor is conducting internal evaluation and conducting internal investigation and evaluation for management. If there is any loss of fund within an organization, if there is any fraud going on in a company, it is the responsibility of internal auditor to conduct investigation, to look at who are the people responsible for the fraud, who are the people that need to be sanctioned, and so on like that. So this is one of the internal audit function. Another internal audit function that we have is constant review and appraisal of existing internal control measure. So this is one of the functions of internal audit. Now, what are the factors that an external auditor will be considered before relying on internal audit work? As an external auditor, you are not the staff of an organization. Your job have a time ban. You don't have your job is based on time ban. So you have some number of days to deliver. So as a result of that, you can't do 100% vouching of transaction. You can't do 100% verification. You can't do 100% review. You have to ensure that you do sample. So what an internal auditor has done as an external auditor, you need to review it so that one can be as your starting point. So being the work of internal auditor will help you as an external auditor not to spend too much of time doing your job. Some of what internal auditor have done, you can rely on it to form your opinion. Do you understand? You can rely on it to form your opinion. However, there are some factors or an assessment that need to be considered as an external auditor before you can rely on internal audit work. One of the factors is called the degree of independence. The degree of independence from the internal auditor we determine whether external auditor will rely on his work or not. If the internal auditor is not independent, external auditor cannot rely on his work. That means if the independence of the internal auditor is being impaired by some factor like familiarity threat or self-interest threat or conflict of interest and so on like that, all this that impair the independence of an internal auditor, once that one is there, as an external auditor, you don't rely on the internal audit work. Another factor that we determine is scope and objective of internal auditor. The scope and objective of internal auditor, if the scope is wide or the objective of internal audit job is wide, as an external auditor, there's nothing wrong if you can rely on some of his work, if you can rely on some of his conclusion. So there's nothing wrong on that. So another factor, the level of due professional care. That means, this one means the level of due professional care exercised by the internal auditor. If while doing the job as an internal auditor, if you exercise some due professional care while carrying on your responsibility. So when it is the turn of external auditor to review the account, external auditor can rely on some of your work because you have carried out some level of due diligence. So that one is very certain. So another one is the technical competence of the internal auditor. As an auditor, either internal auditor or external auditor, you must have technical competence. Technical competence means you have the relevant knowledge and skills, updated knowledge and skills in your field. You know the updated knowledge in the area of audit. You know the updated knowledge in the area of tax. That means you are technical competence. You know the new the going trends in the accounting profession. You understand? If you are technical competence, an external auditor can rely on your job. That means you know what you are doing. You understand? You have the updated knowledge and experience and so on like that. That means you know what you are doing. An external auditor can rely on your job. So the level of technical competence exercised by the internal auditor will also determine whether the external auditor should rely on his job or not. We have another one called the quality and quantity of audit report. The audit report of the internal auditor, external auditor have to look at it. Is it quality? Is it more robust? If it is quality, if it is more robust, that means an external auditor can rely on those reports to form part of their opinion. So an external auditor can rely on that to form their opinion. So that is one of the factors that also need to be considered. Another factor that need to be considered by external auditor before relying on internal audit job, internal audit work is the standard of the working paper. Working paper means supporting documents that you gather during the course of your audit, that you use it as an evidence, as part of your audit evidence. So if this working paper is quality and standard, you understand, an external auditor can rely on the internal audit job. But if the working paper is not quality and standard, an external auditor cannot rely on the job. So the quality and standard of the working paper will also help external auditor to determine whether to rely on internal audit job or not. So all these are the factors that need to consider by internal audit. So another type of public sector audit that we want to look at is called assurance engagement. Assurance engagement. What is assurance engagement? Assurance engagement is most common in the public sector. It's an inquiry or investigation set up by government to find the causes of an event or to find the causes of mismanagement of government funds. So assurance engagement, like I said, is an inquiry commissioned by government or a finding committee commissioned by government to find a root causes of an event. Maybe the 20 billion is missing in a particular ministry. Media now carry the report. Federal government can set up a committee called assurance committee that will go and investigate whether actually that 20 billion is missing or not. So they will now look at what need to be done, what government need to do in the future to guide against such weaknesses. So, or to block against such loopholes. So that is called assurance engagement. So assurance engagement must be in line with legal, regulatory, and statutory requirements. So guiding the engagement. So for in what area do you think government can set up assurance engagement? One of the area that government can set up assurance engagement is in the area of procurement or in the area of treasury management and so on like that. So this assurance engagement have some steps. What are the steps that you need to follow while doing assurance engagement? So if you are given an assignment to go and do assurance engagement, what are the steps that you need to follow if you want to do that assurance engagement? One of the steps that you need to follow is for you to review the financial statements of the company to determine whether actually any fund is missing or whether actually there is one weaknesses in the internal control. So when you review the financial statement, you review the internal control system of the organization to look at what are the rule and regulation laid down by the internal control system. So the next thing is you evaluate the application of relevant financial legislation. You look at all those relevant financial legislation like IFRS, like IPSAS, like Nigeria Tax Act, you understand, like Insurance Act, all these, you need to look at it. After that, you conduct compliance tests. You do what? You do compliance tests. From your compliance test, if your result is not, you didn't gather enough audit evidence from compliance test, you can go further by doing substantive tests. So by doing substantive tests, going further to do substantive tests, you do detailed tests of the transaction and balances. So after your substantive test, you can write your report. You can write your assurance report. Content of assurance report. Content of assurance report. What are the content of Leave it. Fauzia, I will come and do it. Leave it. Go and remove my key from my... So content of assurance engagement. What are the content of assurance reports? One of the content of assurance report is confirmation and amount of losses. You need to confirm the amount that was actually missing in the government purse. Confirmation of the amount of losses. You need to confirm whether actually certain amount of fund is missing in the government purse. So confirmation of the amount of losses is very key. After that, another content is you need to determine which regulation, while you are writing your report, your assurance report from the assurance engagement given to you, you need to state the law or the regulations that was violated. You need to state the law or regulation that was violated. This is part of the content. After that, you need to do recommendation. You need to recommend to effect correction or prevent reoccurrence. In your report, you need to provide a recommendation what government need to do to ensure that such thing will not happen in the future again. You understand? To prevent your reoccurrence. This is part of the content too. Another one is you need to state or name the officer and their post. Those officers, those staff, and their post, those staff involved in the violation and their particular post, the post that they occupy in the government, you need to name them. You need to state their name and their post that they occupied. You need to determine the degree of negligence of the individual officer. You need to determine the degree of negligence of the individual officer. While lastly, you need to recommend necessary action. You need to recommend necessary sanction. So that is all what we have on assurance engagement. So another type of audit we want to look at now is called specialized audit. Specialized audits too is most common, is also common in public sector accounting. Specialized audit is also common in the public sector accounting. It is with the assistance of a specialist. A specialist is a person that have knowledge and experience in a particular field or knowledge and experience in a relevant discipline. As an external auditor, sometimes while you are doing your audit, you may require the service of specialists because the audit you are doing is a specialized audit. When you are doing a specialized audit, you will require the service of a specialist because you are not experienced in that field. So specialists, when you require the service of specialists, they will help you to gather some evidence that can use as a base to form your conclusion. So this specialist is very important in the public sector audit. Who are the specialists? Legal practitioner, they are specialists. Forensic accountant, they are specialists. Estate surveyor, they are specialists. Medical practitioner, they are specialists. Pharmacists, they are specialists. Civil engineer, they are specialists in their field. All these people are mentioned, they are specialists in their field. If you want to audit a construction industry, you may need the service of a civil engineering that will help you to do evaluation of work in progress, that will help you to know the value of work certified. If you want to do audit in a pharmacist industries, you may need the service of a specialist that will help you to determine whether that will help you to carry out inventory of the drug, that will help you to determine the value of the drug. So you will need the service of a specialist. So a specialist is very important in a specialized audit. What are the areas where the service of a specialist will be needed by an external auditor? Area where the service of a specialist will be needed by an external auditor. As an external auditor, what area of audit do you think you will need the service of a specialist? Number one, valuation of type of asset. When you are doing asset valuation, maybe you want to value land, you may need the service of a specialist, like estate surveyor, or you want to value a building, you may need the service of a specialist, like estate surveyor. If you want to value mineral resources, you may need the service of a geologist. So valuation of different type of asset like land, building, machinery, mineral asset, and so on, you require the service of who? A specialist. Another one is measurement of work completed in progress. During a construction contract, you want to measure the work completed in progress. You will need the service of a specialist. Measurement of work completed in progress during a construction. You will need the service of who? A specialist. Example, you will need the service of an architect. You will need the service of a civil engineer during the construction of a project, during a construction. While you are doing audit of a construction contract. Legal interpretation of an agreement. You want to interpret an agreement. Maybe you want to interpret service level agreements. You will need the service of a specialist. There are some agreements given to you during the course of an audit that if you want to interpret those agreements, you cannot interpret it using simple English. You will need a service of a lawyer, legal practitioner, that will help you to know the legal interpretation of these agreements. You want to do stock taking of drugs or chemical, you will need the service of a specialist like chemists. So all these are very important. So you want to determine the amount, you want to determine the value of life assurance policy. You want to do actuarial valuation. You will need the service of a specialist called actuarist. It is very important. So all these are very important. Now, what are the factors to be considered before you can require the service of a specialist? What factor that you need to consider during the course of your audit that will help you to determine whether you need a service of a specialist or you don't need a service of a specialist? Number one, the engagement team knowledge or previous experience. That means the knowledge of the engagement team. Maybe one of the engagement team is a lawyer. One of the team of the auditor is a lawyer. In that case, if you have somebody in part of your engagement team that is a lawyer, so you may not say, if you want to interpret some agreement, you may not need the service of a specialist because you have the person that have the knowledge within your team. Another one is maybe the previous experience of the matter being considered. Maybe that matter that is being considered that you want you to know whether you need the service of a specialist or not. What is your previous experience on that matter? What is your previous experience on the matter? Maybe you have an experience in it. You have done such kind of work or such kind of audit in the past before. So that one too will determine whether you need a service of a specialist or not. Another one, the risk of material misstatements. The risk of what? Material misstatements. The risk of material misstatements. The risk of material misstatements. If you don't require the service of specialists, that one can affect your audit opinion. If you know that it will affect your audit opinion, audit conclusion, you may require the service of specialists. Another one is the quality and the quantity of audit evidence. The quality and the quantity of audit evidence will also require whether you need a service of a specialist or you don't need a service of a specialist. The quality and quantity of audit evidence. We also have another one called the evaluation of professional competence of the experts. The evaluation of professional competence of the experts also used to determine whether you will need a service of a specialist or you don't need a service of a specialist. So these two will be considered before you engage a specialist. So this is what we need to know on specialized audits. Now, the next area that we are going to under this public sector audit is called internal control system. Internal control system. Internal control system is an old system of control, financial or otherwise. Internal control system is an old system of control, financial or otherwise, established by the management. It is established by who? By the management, in order to carry on the business of an enterprise in an orderly and efficient manner, so as to ensure adherence to management policy and safeguard assets. So the control that we put in place in an organization to ensure that our asset is safeguarded, to ensure that we follow the management policy, to ensure that we have completeness and accuracy of record. All these are called internal control. Internal control can be financial or non-financial. It is established by the management to ensure that the business of an organization is carried out in an orderly and efficient manner, so that our assets will be safeguarded, so that we can have complete and accuracy record, so and so on, so that we can follow the management policy. All this is what is called internal control. What are the objectives of internal control? One of the objectives of internal control is to carry on the business of an enterprise in an orderly and efficient manner. While another objective of internal control system is to ensure compliance with management policy. To ensure what? Compliance with management policy. Another one is to safeguard assets. Safeguarding of assets is also one of the function of one of the objectives of internal control. And complete and accuracy or validity of records too is also one of the objectives of internal control. So, what are the features of internal control? What are the features of internal control? A good internal control system will comprises of the following. Number one of the features of internal control is record maintenance. Record maintenance. So, internal control will ensure that we keep our record. We have a good record maintenance. We have a good record of the business transaction. This is one of the features of internal control. Another one is physical and intangible safeguard. That means asset safeguarding of assets. So protection of assets. This is one of the features of internal control. We must have a fixed asset registered. We must ensure our asset against fire. Our software, our computer software must have a password. You understand? Our computer software must have a password. Our checkbook, letterhead, and signature stamp must be secured. That means we must put them in a secured office, that there's nobody have access to that office. Another features of internal control system is segregation of duties. Segregation of duties. This one means we must segregate the function of each of the staff in an organization. So everybody should have their direct reporting line. Segregation of duty. You don't give too much of responsibility to one staff. Do you understand? One staff should be the one issuing receipt. Another one should be the one taking the money to bank. Another one should be the one recording it into system, inputting it into system. By segregating duties, you are putting up control. Do you understand? But if you don't segregate duty, you are not giving too much of responsibility, too much of job to one staff. That staff can break internal control. Let's say, for instance, the staff, the cashier, is the one receiving the money from customer. He's also the one taking the money to bank. He's the one recording the money. He's the one issuing receipt to customer. The life of that person, because of your weakness in the control, you have made life easy for that person. That person can be engaged in teaming and leading transaction. He will be using Paul to pay Peter. You know, teaming and leading transaction. Today's money, you will say somebody is owing you, whereas nobody is owing you. You have used the money. Tomorrow again, you will say another person is owing you. The person that is owing you yesterday has paid. You will be using Paul to rob Peter. That is teaming and leading transaction. Another features of internal control system is called organization structure. We must have a clear line of organization structure. That means we must have a defined responsibility and line of reporting system. So you should not be reporting to two superior at the same time. You should have a clear reporting line. If you are reporting to two superior at the same time, that can lead to conflict of interest. That can lead to conflict of interest. Another features of internal control that we have is called personnel control. Personnel control means we should employ the right staff at the right job. While doing recruitment, we should not recruit based on tribe or based on religion or based on familiarity. Only those that are qualified for the job are employed. That is one of the features of internal control system. Another one is arithmetic and accounting. Some people call it arithmetic accuracy. We should ensure that our balances, our total amount tallies with the analysis. We should cross-check by doing a casting of those transactions. Another one is authorization and approval. Somebody should be the one to authorize a transaction. Another boss, another superior should be the one to approve it. You understand? Authorization and approval should be given to different officer. Another party, another officer should authorize, while another party should approve it. So authorization and approval is so key. Now, what are the limitations of internal control system? What are the limitations of internal control system? One of the implementation of internal control system is called management overriding the control. Do you understand? The management that set up the internal control system, since they are the one that set it up, sometimes they override it. You understand? They approve something that is not in line with the internal control system. Maybe our spending limit in a day is 25 million. MD can, you understand? The MD can say, because you want to pay this vendor need the money to supply us good early tomorrow. MD can override control, say, pay him 50 million. And we know that maximum money we can pay based on our organization policy is 25 million. MD can approve and said, you want to override it. Pay the person 50 million. He will need the money to supply us good tomorrow. That is management overriding of control. Sometimes management don't follow the internal control. They override it. Another one is possible collision between member of staff in an organization. The internal control system follows step by step. All those staff that has different responsibility, they can collide together to break internal control system. They can collide together to break internal control system. Another one, potential human error. Sometimes we are human beings. We are bound to make a mistake. So there are sometimes the staff organization does not have intention of breaking the internal control. It can make an error. It can make an error, which is very possible. It's very, very possible. So that is what we have on the internal control system. So the next thing we are going under this public sector audit is called Auditor General. Who is this Auditor General? Auditor General. When we talk about this Auditor General, who is Auditor General? Auditor General, like you said, is the chief external auditor to the government. The chief external auditor to the government is the Auditor General. And this Auditor General is appointed by who? It is appointed by the president based on recommendation by the Civil Service Commission and subject to approval or subject to confirmation of the National Assembly, which is the Senate. So this Auditor General, Section 85 of the Constitution, state out the function of Auditor General. Section 85 of the Constitution state out the function of Auditor General. The Section 85 to also state what power does Auditor General have. One of the power that Auditor General have is power to conduct periodic check. Auditor General can go to any government ministry, government agency, government parastatal to do periodic check, to do a surprise visit. So this is one of the power of Auditor General. Another power of Auditor General is financial and regulatory audits. Auditor General, they carry out what is called financial and regulatory audits. Auditor General carry out financial and regulatory audits. Auditor General, one of their functions is also to carry out value for money audits. That value for money audit that they carry out in government to determine the effectiveness, efficiency, and economy of a transaction is being carried out by Auditor General audit. Appropriation audit is also one of the functions of Auditor General. Appropriation audit is carried out to ensure that all the government spending are in line with the Appropriation Act as approved by the management, as approved by the National Assembly. Now, what are the function of Auditor General? What function of Auditor General do we have? One of the function of Auditor General is auditing and reporting in respect of treasury account. Auditor General, they are the one that will audit and report treasury account of a ministry, government agency, and parastatals. So, Auditor General, one of their functions is auditing and reporting in respect of treasury of a ministry or government agency or departments. Auditor General function, one of his functions is also to determine, is to detection and prevention of fraud, is to detect and prevent fraud. Auditor General, one of the functions is to detect and prevent fraud. Another function of Auditor General is Auditor General establish a control against loss of funds in a government agency. Auditor General, they are the one that will ensure that we have effective internal control system in the public sector and the control against loss of funds. Auditor General also serve as a chairman of Audit Alarm Committee. Auditor General serve as a chairman of Audit Alarm Committee. Auditor General serve also attend Public Account Committee section. He serve as an advisor to Public Account Committee. So that is all the function of Auditor General. Now, the next heading we need to look at is Auditor General duties on the auditing of government corporation. Auditor General duties on the auditing of government corporation. What are the government corporation that we have? What are the government corporation that we have? Those government organizations that generate revenue and can transact business in their own name. They are the government corporation. The government agency that generate revenue and can transact business in their own name, they are the government corporation. So, Auditor General, what is the duties of Auditor General? One of the unique things about this government corporation is that anytime government corporation want to prepare their financial statement, they don't make use of IPSAS to prepare their financial statement. They will rather make use of what standard? What standard do you think government corporation use to prepare their financial statement? Government corporation use IFRS and IAS to prepare their financial statements rather than IPSAS. You know, government use IPSAS, but one of the government corporation, some of the government corporation, they don't use IPSAS. They use IAS and IFRS to prepare the financial statement. Example of those government corporation: NNPC, FAN, NIMASA, MPA. They don't use IPSAS to prepare their financial statement. They use IAS and IFRS. What is the Auditor General duties on this government corporation? Since all these government corporations use IAS and IFRS to prepare their financial statement, and Auditor General is not trained on how to use IAS and IFRS. He's only trained on how to use IPSAS. Auditor General is well trained on how to use IPSAS, but he was not trained on how to use IAS and IFRS to prepare their financial statements. So, as a result of that, if they want to audit all these government corporations, they will either be the government corporation body will appoint an external auditor to audit them. It is not Auditor General that will audit them, and a private audit firm will be the one to audit them. But any of the private office audit firm that want to audit government corporation like FAN, NIMASA, NPA, NNPC, any of these government corporation, any of these private audit firm that want to audit them, first thing they must do, they must register in the office of who as a licensed external auditor of the government. They must register in the office of who? In the office of Auditor General. Auditor General is the chief external auditor of government. So if any of the private audit firm want to audit government corporation, they must go and register in the office of Auditor General. So from the list of those external auditors that register in the office of Auditor General will now give each of the ministry the list of external auditor available. Do you understand? Each of the government agency, sorry, not ministry, government agency or government corporation cannot appoint their auditor by themselves. It is the list provided to them by Auditor General. It is from the list that they will select the auditors that will audit them. Another function that Auditor General do under the audit of corporation, we have state one. Auditor General will provide the list of qualified external auditor to government corporation. This is one of the duties in the audit of government corporation. Another duties or role that Auditor General will perform, Auditor General is the one that will provide guidelines on the fee payable to the external auditors of government corporation or parastatals. Auditor General will provide guidelines on the fee payable to the external auditors or parastatals. Auditor General will comment on the report of external auditors. Auditor General, one of his duties is, after the external auditor have audited the government corporation, Auditor General will review the report. They will send the report to the Auditor General. All this, the external auditor of government corporation, after they finish their audit, they will send the report to the Auditor General, and Auditor General will review the report and make his findings or recommend his findings to a particular committee of the National Assembly. And the committee of the National Assembly that reviewed the report of Auditor General is called what? What is the Committee of National Assembly that reviewed the report of Auditor General? The Committee of National Assembly that reviewed the report of Auditor General is called Public Account Committee. They are the one that perform post-mortem function on the Auditor General reports. So Auditor General also carry out oversight function. Auditor General carry out oversight function on the government corporation. Auditor General carry out oversight function on the government corporation. Now, another thing we need to look at, Auditor General need to be independent, but there are some factors that questions the independence of Auditor General. Questionable of the independence of Auditor General. What are the factors that question the independence of the Auditor General? One of the factors that question the independence of Auditor General is Auditor General does not grant, the Constitution does not grant Auditor General the right and responsibility to hire or fire his staff. Auditor General is not the one that employs his staff. His staff, the staff of the Office of Auditor General, they are civil servants. They are employed by Federal Civil Service Commission. So anything that relates to discipline, their promotion or dismissal is carried out by the Civil Service Commission, not the Auditor General itself. So the Office of Auditor General don't have power to employ any staff. Despite Auditor General office is a big office, it doesn't have power to employ any of his staff. His staff will be employed by several Federal Civil Service Commission, and they will now post them to Office of Auditor General, which is very bad. So this one affects the independence of the Auditor General. Another thing that affects the independence of the Auditor General is Auditor General is not empowered to appoint external auditor for government corporation. All those government corporations I mentioned earlier, NNPC, FAN, NIMASA, NPA, it is not, Auditor General is not the one that appoints external auditor for them. What Auditor General do is to provide them the list of qualified external auditor. From the list of the qualified external auditor, that will now select one that will audit the government corporation. Who is going to select it? The member of the board of those government corporation. Auditor General. Auditor General lack power to execute and enforce compliance. He does not enforce compliance on his audit report. Auditor General cannot enforce compliance or sanction on its audit report. If during the course of the audit, the Auditor General discover anybody that misappropriate government money, Auditor General cannot punish the person. What Auditor General need to do is to send his report to Public Account Committee. It is now left for Public Account Committee whether to discipline that person or not. So Auditor General office cannot charge anybody to court. So all these are the factors that question the independence of Auditor General. Now, the next thing that we need to look at is what are the challenges of public sector audit in Nigeria? What challenges do you think we may face for public sector audit in Nigeria? One of the challenges is independence, auditors' independence. The auditors of the government, which is headed by the Auditor General, they are not independent in their job. When they go to ministry and a department and agency to audit, they don't stand on their ground that this is what they need. So this is one of the challenges of public sector audit in Nigeria. Another one is financial autonomy. The audit of Auditor General is not giving power to generate revenue on their own, or is not giving allocated budget direct. The allowance and salary, the salary and allowance of Auditor General is paid from the Consolidated Revenue Fund. So Auditor General cannot be standalone company. He has to be under different office set up by governments. Another problems of public sector audit is we have a lot of belated financial statements. A lot of financial statements that is more than 3 years that is yet to be completed. Government people, they are very lazy. When they see sweetness like this, they will start breaking the rule. Another problems of public sector audit that we have is ineffective public account committee. Public account committee that review the report of Auditor General, they are not effective in their function. This public account committee, they are member of the National Assembly, either member of Senate or member of House of Rep. They are ineffective in their function. What they are after is their own personal gain. If Auditor General bring a report to them that somebody is stealing government money, they are not after for them to investigate the person, whether the person should return the money or whether the person should be disciplined. What they are after is what will be their own shares. Inadequate personnel. The office of Auditor General don't have adequate staff. Corruption. Even the office of Auditor General himself are corrupt. Most of the staff of Auditor General, when they go out to ministry to go and audit, they will be receiving bribe. So they will be receiving a bribe, PR, and so on like that. So all these are corruption. So, ladies and gentlemen, this is what we have. So let's look at one question that has solution. Let's try to look at one of the questions that have solutions and review the questions. Examinable question 2. said state 8 tests that need to be carried out when auditing revenue collectors. While question 2B say you should list out 7 internal control questionnaire that evaluate the operation of impress accounts. List out 7 internal control questionnaire that evaluates internal control questionnaire to evaluate the operation of impress accounts. So what are the tests that need to be carried out when auditing revenue collector? Number 1 is you need to review the system of revenue collection. You need to review the cash book. You need to cast the cash book. It's another test carried out when auditing revenue collection. When auditing revenue collector. Another one is you need to check the type of receipt issued to confirm originalities. Another one is to review and continue preparation of bank reconciliation. Review and continue preparation of bank reconciliation. Another test you must carry out on revenue collector is carried out spot check on revenue collection. Spot check means surprise visit on the revenue collector. You need to ensure that all money collected is duly collected and accounted for. So all these are the tests carried out when auditing revenue collector. So what are the question 2B? List 7 internal control questionnaire to evaluate the operation of impress accounts. What are the internal control questionnaire that evaluates the operation of internal control accounts? Number 1 question is, was LPO, local purchase order, registered kept by the impress holder and cash disbursed by LPO made by him? When last does so another internal control questionnaire is where receipt issue for unspent cash return, where receipt issued for unspent cash return, was the disbursement request check? Was the disbursement request check? Was the classification made to the appropriate head and sub-head? Was the classification made to the appropriate head and what? Sub-head. Were voucher properly kept and classified? Were voucher properly kept and what? Classified. Was the cash book properly kept? So all these are the internal control questionnaire you need to carry out when auditing impress accounts. So we should take note of this. So this is what we have on internal public sector audit. Do we have any question, any issues regarding this public sector audit? So in the absence of no question, let's try whether we can look at some aspect of IFSAS, one of the aspects of IFSAS. You can just look at the short one so that in the next 20 minutes or 30 minutes, we are done. In the next 20 minutes, we are done. So the material for the IPSAS I have, they are not on my laptop here. So I won't be able to do the IPSAS today. But in our next class, the IPSAS we are going to do, we can treat like 4 IPSAS in our next class. 4 IPSAS, like IPSAS 9, IPSAS 23 will be treated in our next class. IPSAS 11 too. We are going to treat that in our next class. Okay, I have IPSAS 27 here. IPSAS 27. I have that here. IPSAS 27. This IPSAS 27 is called agricultural practice. This IPSAS have to do with agribusiness. How do we do the accounting treatment and disclosure in relation to agricultural practice? What is the accounting treatment and disclosures in relation to agricultural practice? So this IPSAS 3 with accounting treatment of an asset that are biological in nature. There are some assets, most of the agricultural assets, they are biological in what? In nature. What does that mean? In some period, they will grow, they will degenerate, they will produce, and procreation. So in this IPSAS 27, we will look at some definition of terms. What are the definition of terms that we are going to look at? Firstly, agricultural activities. What is agricultural activities? Those, the management by an entity of the biological asset for sales. Agricultural activity is the management by an entity of the biological asset for sales, distribution, or conversion into agricultural produce. They are the agricultural activities. When you deal with livestock, fishery, forestry, you deal with crops, plantation, and that. They are all agricultural activities. Another thing, agricultural produce. Agricultural produce means the harvested product of an entity biological asset. The harvested product of an entity biological asset, they are the agricultural produce. Why? What is biological asset? Biological assets, they are the living animal or plant that increase in number. They are the living animal or plant that increase in number. They are biological assets. Let me give an example of biological assets. If you have you have two dogs now, female and male, you put them together. They are biological assets. Mature female and male, when you put them together, in the next 3 years, there will not be two again. They will have increased in the number of units. They are biological assets. Crop, you plant a crop. At the end of the day, the crop, when the crop grow, is going to be giving you input, products. They are biological assets. So biological asset means a living animal or plant that increase in value. So that is biological asset. The next thing, biological transformation means the process that the biological assets pass through before that they will be producing. The process that the biological asset pass through before they will be producing another output. So in the biological transformation is the aggregate process, generation, production, and procreation, which culminated into qualitative or quantitative changes in biological assets. So biological transformation means the stages in which the biological assets change. When you have an offspring, it's going to grow. After it grows, it will be producing. After it produces, you will, if sometime you will not be producing again, you have to. So all those process of changes, they are the biological transformation. Cost to sales. Cost to sales means the incremental costs which are directly incurred during the sales of an asset. The incremental costs which are directly incurred during the sales of a biological asset. They are the cost to sales. Now, what is the relationship between agricultural activities, agricultural produce, and the products that they produce? One of the agricultural activities we have a sheep. Sheep, we can get a wool from a sheep. When we get a wool from a sheep, those wool, we can use them to produce carpets, yarn, and so on like that. Trees, in plantation of plants. What can we get? What agricultural produce can we get from a tree? We can get a failed tree. Those failed trees, we can use it for timber, for logs. Plants, what can we get from a plant? We can get a cotton from a plant. Those cotton, we can use them for cloths. Cattle, cow, what can we get from a cattle? We can get a milk from a cattle. And those milk, what can we use them for? We can use them for ice cream, yogurt. Pig, What can we get from a pig? We can get a carcass from a pig. Those carcass, we can use them for sausage, etc. Bush, we can get a leaf from a bush, and the leaf we can. Hello, everyone. Can you hear me?
Yes, sir.
Please, the network. I have to subscribe for another internet now. So the network was very bad. So we are almost done now. We are on IPSAS 27. Yeah. So the next thing we need to look at on this IPSAS 27, for the sake of time, how do we measure measurement of agricultural assets and measurement of biological assets and agri produce? How do we measure biological assets? How do we measure agri produce? First and foremost, before we look at their measurement, let's look at their recognition. Biological assets or agri produce can be recognized. What are the basis of their recognition? We recognize we recognize biological assets and agri produce when the following occur. First, when the entity controls the asset as a result of past events, and when there is probably future economic benefits that may be derived from that agri produce or biological assets, and when the fair value or the cost of the agri product can be measured reliably. When the fair value or the cost of agri product can be measured reliably. This is recognition of biological assets and agri produce. How do we measure biological assets and agri produce? What are their measurements? How do we measure them? Biological assets can be measured on initial recognition. At their initial recognition, we measure them at their fair value, less value to sales. Biological asset is measured at initial recognition at a fair value, less cost to sales until disposal. Agri products, agri produce, they are measured. The agri produce harvested. What we harvested from that biological asset is called agri produce. This agri produce, they are the offering of the biological assets. These are measured at a fair value, less cost to sales at the point of harvest. What we harvest from the biological assets, they are called the agri produce, and they are measured at a fair value, less cost to sales at the point of harvest. Less cost to sales at the point of what? Harvest. This is the measurement of agri produce. So let's look at a question from this material and solve the question. Let's look at a question. We have one question. We can solve the one question, and once we solve it, there are some We have number 2 question. Number 2 question is theory. You can go and study the number 2 question. So the number 1 question, let's look at the number 1 question. So somebody should help us read. Question 1.
All right. Question 1. Where State Agricultural Corporation is involved in rearing of cattle livestock, it acquired 300 calves at fair value of 60,000 naira per calf. During the financial year, cost of bringing the calves from the point of purchase was put at 200,000 naira. In addition to the above, the entity incurred a total sum of 550,000 naira in maintaining the cattle during the period. The cattle were later slaughtered at the entity's abattoir and carcass sold for a total sum of 24,500,000 naira. Required. Prepare the journal entries to record the above transaction. That's the end of the question.
Okay, thank you. Prepare a journal entry to record the approved transaction.
You're
We
welcome,
start.
sir.
Okay. First, they acquired 300 calf at a fair value of how much?
Fair value of
60,000 per calf.
60,000 naira per calf.
This transaction, how do we record it? How do we raise journal for this transaction? We debit biological assets. Biological assets will be debited. 300 times 60,000. That gives us 18 million. We debit 18 million as biological assets, and we credit our bank account being purchase of calf for rearing. That is when they buy the biological assets. When they buy them 18 million in total. We debit biological assets, we credit bank accounts. Second journal that we raise is, what is the cost of maintaining the calf? What is the cost of maintaining the calf? They said, cost of bringing the calf to the point of purchase. This 200,000. How do we raise journal for it? Again, anytime we buy an asset, cost of bringing the asset from the point of purchase to the point of use will still be added to the cost of the asset, Abi? So what we do on this one too, we debit biological asset 200,000 naira, we credit bank account, being carrying cost of the cave to the farm. Do you understand this journal too?
Yes, sir.
That means the total value of the biological assets now will be how much?
18.2.
18.2. So the next thing again, in addition to the above, the entity incurred a total sum of 550 in maintaining the cattle during the period. The cost of feeding the cattle during the period of rearing them before they sell them is going to be capitalized to the cost of the cattle too. The cost of feeding them. How much is the cost of feeding them? 550. We debit biological assets and we credit bank account, being the maintenance of calf. At the end of the day, before we sell the calf, we need to know the value of the calf before we sell them. What is the value of the calf before we now sell them? What will be their value?
18.750.
It's 18,750,000 naira.
That 18,750,000 naira, we remove it from biological assets. We credit biological assets. We debit inventory held for sales. Now we want to sell them. We move it out from biological assets. We debit inventory what?
Inventory held for sales.
Held for sales. Now at the point of sales, how much do we sell? How much do we sell them?
24,500,000.
That 24,500,000 money is going to come to our bank, Abi.
Yes, sir.
We debit our bank accounts. Our inventory held for sales, we credit it with that 18,750. The inventory held for sales, we credit it with 18,750. Why the balance? The balance is how much? The balance is how much? 5,750,000. That 5,750,000 is the profit we made. That one will go to our profit and loss account. Being profit arise from sales of cattle. Do we understand?
Yes, sir.
Yes,
So,
please. But will you share this material with us because you've not sent this to the group?
okay, is it everything I must share? I will share it.
So
Don't worry.
how do we
Yes,
go back to it
sir.
to practice?
Okay, I will share it. I promise you.
Thank you.
Okay. So that is it. Let's look at that question 2. Question 2. Question 2. Oh yeah, let's read the question 2. Question 2. Somebody should read it for us.
According to ICSAS 27 on agriculture, which deals with the accounting treatment of assets that are biological in nature as regards to their period of growth, the generation, production, and procreation, and the basis for the measurement of agricultural produce at the period they are ready for harvesting. You are required to state the relationship between agricultural activities and non-agricultural activities, conditions for the recognition of biological assets and agricultural produce, the measurement of biological assets and agricultural produce.
Okay. A, the relationship between agricultural activities and non-agricultural activities. First and foremost, what agricultural activities can we derive non-agricultural activities from? Take for instance now, from cow, what can we derive from cow? What agri produce can we derive from cow?
Milk.
Milk. So what are the non-agricultural agri activities can we use milk for? Ice cream or yogurt, Abi? Do you understand? So another one, sheep. The sheep, we can derive wool from the sheep. What can we use wool for? We can use it for carpets, yarn, trees, all those trees, big trees. Once we cut the trees, it's an agri produce. What can we use the trees for? We can use it for timber or logs. Some of the plants, they have rubbers. From some of the plants, we can get a cotton from them. And that cotton, what can we use the cotton for? We can use it for clothing. Like I said, for cow, which is called cattle, we can get milk, and that is the agri produce. From the milk, what are the non-agricultural activities can we get from milk? Is ice cream, shoes. From the pig, we can get carcass, different part of the kicks. What can we use it for? We can use it for sausage, cured hams, and so on like that. Vine, we can get grape. What can we use grape for? We can use it for wine. Some of the fruit trees, we can get fruit from them. And that fruit, we can convert it to a juice drink or processed fruit and so on like that. So those are the relationship. Second question said, condition for recognition of biological assets and agri produce. Biological assets can be recognized. Income from biological assets, revenue from biological assets can be recognized when the following occur. When number one condition is when the entity controls the asset as a result of past events. Number two, where there is probability that future economic benefits will flow from that biological asset, will flow to the entity. While number three condition for recognition is where the fair value of the cost of the biological asset can be measured reliably. These are the three conditions for recognition. Now, measurement of biological assets and agri produce. How do we measure biological assets and agri produce? Biological assets can be measured at an initial recognition at the reporting day at a fair value. When we want to measure biological assets on initial recognition, we use a fair value, less cost to sales on disposal. While agri produce is measured at a fair value, less cost to sales at the point of harvest. So these are the two measurements of biological assets and agri produce. So ladies and gentlemen, let's take note of this. So right now, I will share the material. This is one of the IPSAS we have talked about. Last week, we talked about one IPSAS called IPSAS 4, foreign exchange transaction. This week again, we have talked about another IPSAS. By next week, if we have time, by our next week lecture, we may look at 3 IPSAS. But there's one topic that is very important. It's called Sustainable Development Goal. We'll look at that first before we look at the IPSAS. So do we have any question, any observation?